OCL as a payment aggregator for online offline merchant and already works with various other banks, and Paytm Payment Bank is one of the key banks in that. And from here on, we are very clear that we will work with only other banks and not PPBL. And PPBL is just one of the various other banks, any which ways. OCL has already been working with other banks since last 2 years, and especially when embargo had come to the payment bank, we already had started to work and accelerated the plan for movement to other banks, and other banks have actually already started working with us. So it is an important thing for me to tell you that we continue to decline and decrease the slant-wise dependency on Paytm Payment Bank, but there is a still significant enough dependency, I would rather say, there. And we now accelerate the plan and completely move to other payment banks partners. And remember, these are payments related relationships, which means all banks have necessary technology and capability already there. And I'm very happy to tell you that we are genuinely overwhelmed by the support that we've received from the various banks, large banks of this country and our country, and those who are already a partner, and more additional large banks have reached out at very, very senior level to say that they will be very happy to help us and happy to execute relationships that we in past have been doing with Paytm Payment Bank. And we obviously very clearly, we are going to take that as a step forward and work with current and many more incremental bank partners. Going forward, the keyword is that we will not work with Paytm Payment Bank, and that is what probably means that other banks will come. With regard to the direction on termination on nodal account of OCL, that is 197 Communication PPSL by Feb 29, OCL and PPSL are already in process of moving nodal account to other large commercial banks, and that will be done definitely before the due date. And OCL's marketing and financial services businesses, where we market and sell other services to the consumers, are not affected due to these directions. And these directions are towards the associate company, Paytm Payment Bank Limited. It is important for me to point out that there will be requirement to have operational change for the merchant relationships that we have, where the merchants have relationship with Paytm Payment Bank, and those relationships needs to be operatingly be changed, and there will be an operation change there. Overall, I can say that it is on behalf of Paytm, I can say that it is more of a big speed bump, but it is something that we believe that with partnership of other banks and capabilities that we have already developed, we'll be able to see it through in next few days or quarters, as the case would be. So thank you so much. And with this, we'll take the question answers.
First question is from Sachin Salgaonkar. Sachin, you may unmute your line and ask your question.
Thank you. Vijay, I have 3 questions. First question, actually, can you help us and understand what exactly went wrong where, I mean, for some time we were hearing from you guys that, this should get resolved, But when we look at some of the words being used of persistent, non-compliant, need continued material supervisory concerns, can you help us explain what is something where RBI is not fully comfortable and what further needs to be changed from that perspective?
We are in recipient of the same letter that is very public.
Sachin, could you just ask all 3 of your questions, then we can answer it all at once? Sorry, Vijay.
Okay, yeah, that's right.
Yeah,
because
sure,
we want to take a lot of questions, so we will suggest that whenever you are asking questions, just put all 3 questions or 2 questions that you are asking to.
Got it. Okay, so that was first question. Second, Madhur, if you could help us understand how to quantify the 300 to 500 crore impact on annual EBITDA, i.e. how much is coming from revenue, how much is from EBITDA, and I presume this is for this year, right, you're looking for. And third, what Vijay mentioned in the opening remarks, the operational changes which are needed from a merchant perspective. Just wanted to understand what kind of changes are these and how much time will it take?
Okay, so I'll take the first one, Sachin. As you saw the letter that is publicly sent there is another letter that bank has received. But based on that, I cannot foresee what we did not see or not see. There is obviously RBI believes, and we totally are believing of the fact that there is something that RBI would have seen. Have they sent us details? Answer is no, they've not sent us any details. So something that is based on over the period, what different audits they would have done and their solutions based on that is the opinion that has come based on. So we don't know the exact nuance, what triggered or one line item.
And then Vijay,
I can take that.
So how does one get a comfort that RBI should get comfortable going ahead with these changes, right? Because if you are exactly not clear, Paytm is not exactly clear in terms of where RBI was not fully convinced, then, I mean, how do you look to fix those issues?
Actually, the key word here is that it is in discussion with Payment Bank, and Payment Bank cannot share these facts with, let's say, parent or shareholders out there. So that's also one of the reasons that we can't discuss this. This is an interaction between bank and Payment Bank, central bank and Payment Bank.
Sorry, so if I can just clarify, there's certain direction, as Vijay said earlier, there's certain direction that they've given to Paytm Payments Bank with respect to their operations. If we are doing a service in partnership with Paytm Payments Bank, those services, and we'll come to your third question, would go through some operational changes and so on. But like Vijay said, going forward, we would work only with third-party banks who don't face such issues from the RBI, and who also do provide these services to other consumer technology companies. As I'm sure you're aware that that is a pretty standard business model in the industry, where consumer technology companies such as ours, who have a lot of app traffic, will work on payments products with various large banks, right? In our case, we were doing various things with other banks, but various things also with Paytm Payments Bank, and those services would be affected. So that's sort of the Paytm point of view on this, about what we need to do going forward. With respect to your second question, the 300 to 500 crore that we mentioned is the worst case annual EBITDA impact. That does not take into account the expectation that we will be able to, sort of continue all the businesses or that Paytm Payments Bank, that we're dependent on Paytm Payments Bank for. That is primarily there's primarily two lines of businesses that we do. One is Paytm Payments Bank has a wallet. For that wallet, we provide two services. One is that we are the app on which a vast majority of customers come and add money to that wallet. On that, we make some revenue and some profitability. And the second is that we are a payment provider effectively. And the second is that we also offer, as a part of our merchant services, where we provide payment services to merchants, both online and offline. We also allow those merchants to accept Paytm wallet. In those cases, the merchants pay us a revenue, and we pay an interchange effectively to Paytm Payment Bank. So the worst case margin, EBITDA margin impact of that is 300 to 500 crores. We have called that an annual EBITDA impact. I do expect that we over time will be able to offset this in a big way, but we have called that out as a sort of an annual impact.
Okay, thanks, Madhur.
Pavish, did you want to take the third question? That's Sachin.
Sure. So Sachin, the operationalization piece means two things basically. So when you are a merchant, you have and it's an offline and online merchant conversation. So I'll take both of them, but let's start with the offline merchant, where you see a Paytm QR, which is powered by Paytm Payment Bank, right? And now that QR has a VPA, a virtual payment address of the Paytm Payment Bank. So now that QR will have to be changed. The VPA will have to be changed to any other sponsor bank. And we have multiple sponsor banks who anyway work with us, large sponsor banks who anyways work with us, while we used to predominantly work in the offline space with Paytm Payment Bank, but in large enterprise and online space, we work with other operators in the UPI space, etc. So when we say operationalizing difference, we basically now have to work in making sure that the VPA is changed to another bank. We have multiple options of the banks that we are currently in conversation with. We'll obviously conclude one bank, two bank, or or a large number of banks to make sure that we're able to do this exercise. This will be a large exercise, so it will be split into two parts. One, there is a new acquisition, which is much easier, that the new acquisition can immediately start to happen on other bank BPS. So we decide. So that decision will take in the next maybe a week or so, because there'll be some commercial involvement, etc. And we have proposals to that regard already in the system. So we are evaluating them appropriately. And then there will be how do we move the existing merchants who are accepting on UPI to any other bank or banks. So that discussion will involve discussions with regulator, NPCI, etc. That can it be a one-time movement or a case-to-case movement. So we have had some discussions, but obviously they are yet to be concluded formally, and it will take maybe a couple of days more when we have more direction on how we do this migration.
Right. Bhavish, one small question. Will the terms of VPA with Paytm Payments Bank and other banks be materially different and hence expensive for Paytm?
It will be largely similar, because the fact is that today, purely from a P2M, there is a UPI incentive component. So we have a commercial on sharing of incentive with the other VPA banks that we have, which is largely in the similar range that we have with Paytm Payment Bank.
Got it. Thank you so much.
Hello.
Hi. Next question is from Vijay Jain of Citibank. Vijay, you may go ahead.
Yeah, hi, thanks. So just a clarification. First question is on the 3 to 5 billion rupees impact that you're talking about. Is that basically assuming wallet ceases to operate? Is that it, or are you assuming some kind of a smaller size of the wallet business? And does it also include different commercials as you move some of these relationships, including the nodal account, to other banks? And related to that, I would just request if you could break down, your core net payment margins a little better, the 7 to 9 bips a little bit better, so we have a better handle on that post these developments. So that's my first question. My second question would be, so if you need to, let's say, shut down PPBL, either because it doesn't take deposits, so has lower reasons to exist going forward, could you take over the Paytm UPI and the Paytm wallet products back into OCL? Are there challenges with that if you wanted to do something like that? That's my second question. And any commentary on the financial services side from your partners post this development? Those are my three questions.
So Vijay, let me take the questions in the reverse order. So we've been working with our various partners. So our equity broking and our insurance business obviously remains unaffected, because they do this business independently of any relationship that they may have with Paytm Payment Bank. So that business is 100% unaffected. With the lending business, lending business has no relationship of any kind with Paytm Payment Bank, other than the fact that there would be merchants who may have taken a loan and have their repayments coming from a Paytm Payment Bank account, which is not a very large number, but I will give you a directionally number, maybe about 10-15% odd merchants on a ballpark number who would have the repayment set up happening from the PPBL bank account, because they were taking settlements there. There we have to move their settlement accounts to any other bank account that they would like to take the settlement, so the repayments can keep coming. And that process is already on. It's not a very large process, because we have about live 400,000 merchant loans. Even if you take 15% of this, we're talking largely about 60-70,000 merchants. And we have a 30,000 sales force on the ground, which is already in the market to make sure that those repayments and the settlement account changes, etc., are done on or before 29th of February. Same is on the personal loan side, that there is a much lesser number than 15% who have their e-NACH or autopay set up through the PPBL account, and hence they have to be changed as a mandate. That work obviously is also on. It will not be physical work, but it will be done digitally. So we are in the process of doing that piece. Earlier, the effort was to make sure that they are able to convert their autopay into other mandates or with other banks that they have. And that effort is now got amplified further, just to make sure that that exercise can get completed before 20th of February. Beyond that, there is no operational challenge for the continuation of the lending business. Obviously, the new lending business will not have an option for the user to have a PPBL bank account as a repayment bank account. And hence, the new business can continue as it is. Having said that, as expected, because it's a material development in one of our associate companies, each lender have their own set of areas of concern and clarification that they seek from us. We are in the process of discussing and engaging with them on clarifying a lot of nuanced questions like you may have and others have as to what's the impact on the portfolio, what's the impact on the overall business. We've been able to answer all those questions, and now they have to process those questions and come out with their further incremental questions or call to action. Till that time, we have proactively worked with our partners to say, till the time we're able to make these operational changes, let's pause the new origination of loans for that period of time. And once we are able to solve the operational things for existing and the new one, we restart. So there will be some disruption, and hence this 300 to 500 crore number that Madhur was saying will have some impact from coming in from lending, that we will not be originating loans for maybe a couple of weeks before we solve for the operational challenges, and then we go back to normal.
Okay, well, that is optimistic, and that is coming in from the Paytm management. Vijay Shekhar Sharma and Madhur Deora addressing questions and taking questions from analysts on the Paytm call after, of course, what the RBI circular said yesterday. Remember, the stock ended 20% lower. I mean, it started in the morning down by 20% and never sort of, circuit never opened through the course of the day. The last part of the answer, the Paytm management essentially saying that, maybe origination of loans, they'll be able to do maybe in a few weeks' time once they solve for some of these issues. Is it going to be as simple and as fast a resolution as that? Something which we will need to see. Ritu is with us. She's been, of course, tracking the story. Ritu, you've been listening to the full call.
Yeah.
Top takeaways.
Well, to begin with, it's very clear from Vijay Shekhar Sharma's commentary that, beyond what is publicly available as to why RBI has taken the action, and they're also linking it back to what happened in 2022 when, they were first asked to stop onboarding customers. There's nothing beyond that which had warranted this action. So I believe they'll also be, seeking some sort of redressal on that front. Operationally, yes, he said for a couple of weeks, loan origination may be hit. Again, to clarify to the viewers, this is a payment bank, which means it cannot lend. The lending is with, tie-ups with other NBFCs, etc. That's what it does. That will pause, he said, for a couple of weeks. Interestingly, he called it a speed bump. And he said,
a big speed bump.
A big speed bump, which could be resolved in the next few days, a few quarters. It remains to be seen. But that is not the reading of the RBI notification if you look at it, because there's nothing that says that once you're able to rectify these deficiencies, whether or not this embargo, these restrictions will be lifted. So the street is viewing it a little more negatively than the management, of course. And there's nothing much that they've been able to add, but they made it clear. Because this embargo on onboarding new customers on Paytm Payments Bank was in place since 2022, they've already started to work with other banks, and which, by the way, is a rule, which NPCI says if you have more than 5% market share in the UPI transaction market, you must be banking with at least two players. And that happened after Yes Bank had, issues back in the day, and then, some, transactions were getting affected. So NPCI came out with this rule that if you have a large share, you must have at least two banks in place. In the case of Paytm, it was only Paytm Payments Bank. And since that embargo was brought on, they said they've started to work with other banks. And that is what I think he's reiterated through the first half of the call. We have these relationships in place. We're very humbled that some of the large banks have already reached out to us. And, we will be able to resolve this going ahead. But, we have to see, because, Macquarie, for instance, saying the fact that you're constantly in crosshairs with the RBI, is it also going to affect your lending relationships? When others come for tie-ups for loans, are they going to think about it twice? But of course...
But on the call, that statement that you said, I think one of the things was overwhelmed by the support we received from banks in the country, right?
From large banks,
so that I'm assuming is now.
I think he was talking about the prior period, not since last night. In general, talking about they're deepening their tie-ups and relationships with other banks.
I believe he was talking about the support he's got since this RBI action was taken.
Okay.
Because they've already started engaging with banks because of the embargo. But I think since this new action, and they have to shut down in any ties with Paytm Payment Bank. They have to bank with others, and so that's what he's referring to by saying we've got overwhelming support from other large banks.
But Ritu, the interpretation, I mean, the management constantly kept maintaining that things will kind of get back to business as usual, maybe in a couple of weeks or a couple of quarters with respect to loan originations. But again, the interpretation, this needs to pass through the RBI. The RBI needs to come out and say that they're satisfied with the operational changes that Paytm Payment Banks has made. So
very much.
I mean, it can't be taken as something which is in the management's hands right now, right?
It's not, and typically when we've seen embargoes on various other financial entities in the past, it's taken, like in the case of HDFC Bank, it's taken over a year for them to lift those restrictions. In the case of Paytm Payment Bank, it's already been 22 months since that first embargo was placed on onboarding new customers. So clearly RBI is not satisfied with the sort of progress that the bank has made, and therefore this drastic action that they've now put in place.
Sorry, just a basic question. Did they address what is the reason behind the action? Did they say?
Yeah, I think that was the first question. And they said that there is little that we know outside of what is in public domain. That in their audits and in RBI supervision, they found some deficiencies because of which they've taken this action. But beyond that, he said, even we're not aware if there was anything besides this that caused them to take this action. And that's, I think, one of the first few questions Vijay Shekhar Sharma did address.
No, absolutely. I think a lot of sort of analysts who've written on the subject are on that call. So we'll leave you to listen to the call and sort of come back with more details. But I think we'll wrap up this special broadcast. Stay tuned. There's more coming up in terms of news and updates after a quick commercial break. Stay with us.